China has seen its debt rise so fast, it simply cannot keep up. Countries which find themselves in this predicament invariably find themselves in a recession or worse. Like all other nations, China has become addicted, like a sugar addict's sweet tooth, to the unlimited, constant generation of debt. You came here for the truth, so let me unveil that for you. Today, let's have our focus on China. Very important to see exactly what's going on with the accumulation of debt there and see how that connects globally. The Bank for International Settlements, also known as the BIS, has become the latest global institution, not the first, of course, to warn that China's rapidly expanding debt burden is setting the stage for that's right, financial crisis. I didn't say that. That's the BIS saying that. And for those who don't know, the BIS is often referred to as the central bank of central banks. The total size of the country's debt pile is not extraordinary in itself. The BIS estimates it's still smaller as a percentage of GDP than in places such as the UK, Japan, and the Euro area. But with the speed at which it's accumulating is the worry. And essentially what we have here is all countries accumulating debt. It's not just China. Let's not just point the finger at China, oh, look at what you're doing, because every country's doing that. The reason I mention this video in this video here is the fact that we have some, let's say a faction of individuals who believe that nothing that China does is wrong and that they'll just grow and grow and grow and grow forever. But there are setbacks in any country. Look at the US. On its way to having this empire, it had many, many setbacks. But guess what? All along the way, it was moving up and up and up. And that's surely something that we can see in some ways occurring in China, where we have many people moving from the rural areas into the big cities where they don't worry about their agriculture, and they have to then buy from the stores and everything like this. They have to start getting into buying all different types of things, whether it's clothing, whether it's televisions and everything else. So they sort of change, and it's such a big change, because if even 1% of the people in China start doing something, buying something, it really swings the markets in one way, shape, or form. So that's important. Now let's look at this. At the end of 2008, the total debt in China was 147% of GDP. And in less than 1.5 units of credit were needed to generate one additional unit of GDP. As of March 2016, China's total debt was equal to more than 255% of GDP. And that is really outrageous, because if you look at it, I've said it before, that anywhere near 100% is impossible to pay back. Many would suggest that's not true. However, anything even near 100% is just not possible. And it should be considered that after 100%, you're basically bankrupt. We can make that line there. I'd be willing to deal with that. But, of course, the debt will just keep expanding. Look at what's happened, when you include unfunded liabilities in the US, for example. You can get statistics around 100%. You can get them around 200% and 400% and even higher. It just depends on what you're willing to include in these calculations. Do you want to include the unfunded liabilities? Do we want to include all of the unfunded liabilities? Well, then surely all countries would fall in this category where they really are able to manipulate the statistics to show whatever they want. And the last point I want to make about this article before we move on quickly, virtually every other economy in history that has seen that rapid an increase in subsequently experiencing a financial crisis. Okay? Every single time this happens, the debt goes from, let's say, 150 to 250% that fast, just a few years, we have a financial crisis that happens after. But there'll be some people here on the comments who will disagree with me. That's fine. That's absolutely fine, because what we have, arguably, is a massive boom in China. And then as the financial crisis comes in, you have less people buying the goods from China. You also have their own slowdowns there. Then you have the government coming in and implementing different policies, okay? And one of these policies has been relaxing the lending requirements. There's less reserves on hand by the banks, which is terrible. And there is, they're giving out money to people they shouldn't. Okay, this is exactly what we saw during the financial crisis, just prior to the financial crisis and the subprime crisis. And that, to me, shows you that they're desperate. And then you have interest rates, which are also very low in China's own terms. And that there allows the debt to expand further. And then you have China going out and buying up their own shares. They are doing so through their corporations indirectly, but it is, whether you want to look at it or not, is a direct purchasing of shares of the stock market. Why do that if the economy is doing well? If you're telling me the economy is doing well, you don't have to buy shares of particular things. China's debt has grown to alarming levels, according to new data from the Bank for International Settlements that highlight a big potential risk to the global economy. Remember that China is deeply integrated into the rest of the global economy. People are buying things from China. People are outsourcing to China. And this right here has been sort of the status quo for quite some time. However, if China's slowing down, what does that say, number one, about China itself, but also about the global economy? What the biz terms the country's, quote, credit gap is now 3 times higher than the typical danger level. 3 times higher. The measure tracks the difference between corporate and household debt as a proportion of the GDP and the long-term trend, thus highlighting any divergence between current and historic borrowing patterns, a possible indicator of unsustainable debt accumulation. This is, I'll show you the chart for yourself. But what I'm going to say to you is that we have a debt accumulation that is the result specifically of central banking. You can't formulate this type of debt under other monetary systems, even previous ones that were garbage. But you have central banking and you have them running everything, and they simply print up money and they put it out there in the banking system. And it's not like we get free money out of it. I could even see that to be a little bit more beneficial than what they're doing now, although of course it still creates inflation. It's a disaster. But look at what they've done. They've given it to the bankers. The bankers get all the big CEO bonuses. They fire people at the exact same time. And what do? They try to appease the shareholders. They try to increase corporate profits. It's a joke. And unfortunately, a lot of people are hurt by this. The biz has a lot to say about that. The IMF has also come out to say about this. And it's very important to not look at their solutions, but look at when they point the finger in the right places. Next, as we look at this, the chart that I was going to talk to you about, China credit gap rises, the difference between the current credit to GDP ratio and long-term trend. And it is unmistakable that China has increased significantly since the financial crisis. And then you look at the US, which, it's just not accurate at all. But this is how they manipulate the data. Anyway, regardless, China has been one to definitely improve its amount of debt that it has, and improve meaning increase, I should say. Every country has accumulated more debt. No country is better off today than they were prior to the financial crisis or during the financial crisis time in that region. No country. But they make it seem like there's no recessions going on now, and oh no, are we going to end up in a recession? No, our economy is strong, and so on and so forth. That's not happening. It's simply a lie. And then last but not least, I thought this was interesting to see as you look at Steven Spielberg and Jack Ma partnering up together, and they're trying to sort of have Hollywood meet China. And Alibaba Pictures, one really big studio here they did the most recent Mission Impossible movie, if you're not aware. But essentially what I'm seeing here is a lot of interest, in many cases, where we have a lot of interest by either the Chinese government indirectly, or you have the Chinese businessmen or just Chinese investors purchasing businesses, land, and real estate, among other things, in not just the US, but other countries as well. And this happens to be an absolute major phenomenon that has been going on. It's not just a small-time thing. I see this expanding greatly, and a lot of what's happened here has caused bubbles. Look at the Vancouver housing prices, where immediately when they put a 15% tax on foreign buyers, the prices simply shot down very quickly afterwards. And it was a direct and complete correlation there. It was not a mistake. That's important to note. And that's all for this video. If you found it informative, please give me a thumbs up. Remember that every single time you give me a thumbs up, which I do watch, by the way, if you give me that thumbs up, it helps to not only support me to create this content, but also tells other YouTubers out there that this is good quality content, because it pushes it higher up into the YouTube search rankings. So every time that you subscribe, every time you comment, every time you give me a thumbs up, it's helping me out. So I do appreciate that very, very much. If you found this video informative, I know you'll find my book, The Money GPS, even more informative. Head over to Amazon, where they have a look inside feature. That's going to allow you to flip through the pages of the book and see if you like it. Take care.